Good morning. Today is Wednesday, November 19th at 8 o'clock. It's the Finance Committee meeting. I will make another apology. I know this is a quick turnaround from a board meeting last night, but in the interest of having our audit presentation and it approved at the December meeting, we needed to get this meeting in, and this was the date that was available. So I want to welcome back our student reps. We didn't scare them away last meeting, so welcome back, ladies. Also want to introduce
Good
Alex.
morning.
Morning. Want to introduce Alex Frank. Alex Frank is with our new auditing firm, so he will be doing the presentation. I won't steal his thunder. I will let him introduce you all, himself to you all. And he is actually our first agenda item. So if you give me a minute, I'm going to share my screen. And Alec, you can take over and just let me know when you want me to advance slides if I don't catch your cues, okay?
Yeah, sounds good. So cool. Yeah, cool. So, like Kara said, my name's Alex. With Barbecue and Thornton. I am the audit manager on the district's audit. It's our first, like she said, it's our first year with the district. And off the top, it couldn't have gone smoother for being a first year audit. And I said, there's always hiccups with first years. It's just learning how everyone wants to do things. And I hope they feel the same. It felt very smooth, easy communication, and yeah, just want to say off the top. Yep, thank you. So, as I said, we were engaged to do the audit of the district. We came on site, I believe it was the end of October, for a couple of days to look at some physical support. We did some preliminary and very preliminary work in, I believe it was late July, early August. And that was really to kind of, like I said, get that groundwork of the internal controls and kind of how the district functions. As I said, it's a first year, so we're trying to, we have to build everything from the ground up, for lack of a better phrase. Yeah, so if you want to go to the next slide, thank you. So the audit is done following the auditing standards generally accepted in the US, as well as government auditing standards. There's a few responsibilities here. Management is responsible for the financial statements and the implementation of internal controls that are relevant to the preparation of said financial statements. Our responsibility as auditors is to conduct an audit to obtain reasonable assurance about whether the financial statements are fairly presented in accordance with the applicable accounting basis. For fiscal year 25, we, as of now, I don't see it changing in any way, but have a unmodified or clean audit opinion on all reports in the audit, as well as no significant deficiencies or material weaknesses in internal controls that we saw during our testing. Yep. So to give you a background on how we kind of do our audits, it is probably similar to the previous auditor, maybe in a different way. I know in talking to Kara and to Dan, he had a very specific way of auditing, where it's fine the way he did it. He was just very old school and looked at a lot more detail than is traditionally looked at in an audit. And that's just his preference. Nothing wrong with it. We design our procedures based on areas of greater risk. And kind of how we do that is through inquiries of staff, board members, and figuring out kind of where they see the most risk and where they would want the audit to be focused. We also use a combination of analytics and substantive procedures to try and figure out kind of what specific accounts in those areas are the quote unquote riskiest. Each year we look at internal controls, both in total, where we'll talk to staff and kind of get the step-by-step processes for your checks, whenever cash is received, whenever payroll is run. And each year we pick one or two of those areas to test a little more in depth just on the control side of it to make sure controls are followed on a sample basis. We'll also review minutes, contracts, agreements, and kind of see what's going on there. Before I get into any of these numbers, does anyone have any questions on anything I've said so far?
I do. So I'm
Yeah.
sorry. I'm trying to find the hand here. Oh, yeah, here it is. Okay. Question. So you
Mhm.
noted that you do a sample size. So do you do that on a rolling basis, or for instance, do you say like you do operations versus administration or Pacific departments, and you do that on a rolling basis, or how do you go about doing that?
Yeah. So it's not necessarily department focused. It's more on I'd say control cycle. So it'll be revenue collections, it'll be cash disbursements, it'll be payroll. And we do those on a rolling basis. So as a whole for the organization, we'll test one of those three major areas. And part of the standards is the auditing standards say you pick a sample based on population size. So we follow those standards to pick how many of those transactions we're going to look at to get a sufficient sample. If that answers your question.
No, thank you very much. Appreciate
Yeah.
it.
So quickly jumping into, I guess the format didn't stay for some of the numbers. I apologize. Hopping into the fund balances at the end of the year. These are your funds for the district. The general fund being your main operating fund, and capital projects being where a lot of the capital outlay and construction activity is paid out of. You'll see the general fund decreased about $650,000 from the prior year. As you'll see later, that was pretty close to the target on the budget side. So hopefully that wasn't too much of a surprise. The main driver there is just honestly increased expenses and increased revenues. They both increased. Overall, pretty solid compared to budget. You'll see the capital projects increased about $1.1 million. The big thing there is there was a new bond issuance this year, so that gets picked up as a revenue. So that offset by expenses for the current construction leaves you in a surplus this year. But as construction goes on, that you'll see that kind of dwindle down as the expenses come in. Yep. So as I said, for the general fund, revenues exceeded budget by about $860,000. Pretty much every line came in over budget. What you may see on the financial statement side, the audited packet, when you look at it, is on our budget to actual, or ours, on your budget to actual, IDEA funding, which is passed through the IU, is shown as a local revenue in the school's presentation, but on the financial statements, it's a federal revenue. So it's kind of, you might see some discrepancy there of that amount, but the totals are the same. It's just IDEA is technically a federal fund, so it gets moved to the federal sources on the financial statements. Expenditures came in about 1.4 million over budget, and included in that is I believe it was $570,000 expense for a lease under the the GASB 87 accounting standard, which is offset one for one with the other financing source revenue, which isn't included in the revenue number above. So if you take that out, you're sitting at about 800 and I have the exact number. 1 second. About $820,000 over budget on your expenses. And then the net change for the year, as I said, was about $650,000 or $650,000 decrease, and the budget presented about 730 initially and 697 as of the adjusted final budget at the end of the year. So a little better than budgeted, but pretty close to on target for high budget of the year. Quickly, just a quick look at the food service fund. A slight decrease from last year, but overall pretty consistent year over year. And then we get to see the numbers everyone loves, the pension and OPEB liabilities. This year, the district reported an $82 million, almost $83 million pension liability, which is a decrease of about $4.3 million from last year. And then the OPEB liability, which includes the PSERS plan and the district single employer plan, came out $3.7 million, a decrease of about $35,000. These are liabilities required to be presented, but in reality, the district may never have to pay them back. It is the district's proportionate share of the total PSERS liability for the funding of their pension plans. Part of the accounting standards is to put this on the books. I get questions about every year about what is this number? Will we have to pay it? The short answer is probably not. I guess the only way to know is when, if ever, the pension fund gets fully funded or worst case scenario goes under. But as of now, it does not appear that this is actually a liability of the school because it is PSERS who will be paying these benefits out at the end. Now, for capital assets, the district had about $106 million net of, or capital assets net of depreciation. This increased about $9 million last year. And then this is made up of $10 million of current additions. So that's any equipment purchases and increases in current construction, offset by about $5 million of depreciation. And this year also, there was a $4 million restatement of the opening depreciation balance. As we went through the audit this year and speaking to Dan and Kara again, we found a number of assets were over depreciated for the past about year or two. So we went in and just trued up that depreciation to match what should be the actual depreciation as of June 30th. There's about a $450,000 liability for leases, offset almost one for one with an asset for the lease. And then the district had a net reportable bonds payable of about $114 million, an increase of $4 million from last year. That is the difference of current year payments and the current year addition of a new bond issuance. And then as part of the audit, we're required to communicate there's no disagreements with management or any difficulties. There's no material journal entries. As I said earlier, it was a pleasure working with Kara and her team. It couldn't have gone smoother for a first year audit. So thank you both and your entire team for that. Next. And finally, part of our audit is looking at the federal funding for the district. Whenever a district spends, or any entity spends over $750,000 in federal funds, it triggers what is known as a single audit. And this is where we look at specifically compliance with federal awards. This year, we looked at the IDEA funding and Title I. And this, as I said, is a separate audit for compliance with federal regulations. So we look at internal controls over federal awards in general. And then there's what's called a compliance supplement issued by the Office of Management and Budget, which tells us audit procedures to do on these awards. We will be issuing a clean or unmodified opinion on the compliance with federal awards with no significant deficiencies or material weaknesses found. The one thing I wanted to highlight here, which I brought to Kara and I brought Dan, and I believe Neil, when I spoke to you, might have brought it up then. OMB typically puts out this compliance supplement in May. This year, they were working on combining two, I don't want to say sets of rules, that's not quite the right phrasing, but two different requirements for changes in regulations that occurred for 630, but weren't applicable to entities with different fiscal year ends in 630. So they're trying to match two different types of reports together. So we always knew it would be a little delayed. The initial communication was that it would come out in, I believe it said like August. That got pushed back to October. October came and went. And then the shutdown, everything happened. Now we're middle of November, still no word on this compliance supplement. The issue, not issue, kind of, the impact for the district is in terms of the audit. So as it says, there's a separate compliance audit and the financial statement audit, right? Typically, those reports are issued in tandem as one final audit report. Without a finalized compliance supplement, we can't issue a final audit report on the compliance. And we talked to Kara, and there is an option to break out the compliance supplement. It comes with additional work and fees from which I've been pushing people not to do unless absolutely necessary. Only because it opens everyone up to a little more risk of anything. So as of now, like I said, talking to Kara, we've decided to kind of hold I'll say it'll be like a 99% final report until that compliance supplement comes out. And then we can issue a full report with everything in it that you're used to seeing. But as of right now, the numbers presented and everything should remain fairly consistent, or at least materially consistent with what you'll see in the final report. If you look at a draft, the wording might change a little bit just from tweaking how things read. That's about it. That's probably the biggest thing. Unfortunately, something outside of everyone's control, and there's nothing really anyone can do to make it come quicker. But yeah, I believe that's the last slide. Yeah. So I guess I'll open up to any questions from that.
I'll stop sharing real quick. Any questions from anyone? I know there was a lot of numbers thrown at you guys.
A lot of numbers that seemed familiar from past years, even though different presenter. Alex, I appreciate your time. I don't personally have any questions.
I do not have any questions. Thank you for the presentation.
Of course. Yeah, anytime.
Perfect. And I'd like to thank Alex and his team. It was a very smooth transition. It was a new auditor. It was Dan's first year leading the audit. I want to send out kudos to Dan. He did an awesome job. It was very, very smooth. He was very responsive, very communicative. I've not seen a seamless transition like that with a new ABA plus a new auditing firm all in 1 year. So decreased the stress in my life when it came to the audit. So I appreciate that.
Yeah.
So thank you very much. And again, kudos to both of you.
Yeah. Well, thank you. Yeah, like
All right.
yeah, that's it.
Yeah, if there's no more questions, Alex, I won't hold you for the rest of the presentation, so you can get on with your day.
All right, sounds great. Thank you all for having me.
Thank you.
Bye.
Bye. Last thing really quickly that I just wanted to comment on the audit is one of our goals is that we've been trying to reduce our usage of fund balance. I was very, very happy and pleased that while it wasn't a huge gap in between what we anticipated, we fell under what we had projected on use of fund balance. So we will continue to try that trend of reducing our dependency on fund balance, but I think we're moving in the right direction. And we're doing what we need to do while maintaining programs and offering activities programs and making that student experience what we need to make it and what we plan to make it. So I will share my screen again. Give me 1 minute. second. I think I did the weird thing. Hold on. Can you see that?
Yes.
Yes, you can.
Okay. So our next agenda item, and Dr. Yannicone and I have talked in our weekly meetings, and just from the inception of this year, something that we want to make sure that we have as a standing agenda item for these meetings is to kind of give a financial update of where we are this year. So outside of the, the board reports and the financial treasurer's report, which I know is comprehensive, this gives a little bit more real time and a different snapshot, just not month end of the previous month. Also, as we were going through the federal shutdown and the budget impasse, we wanted to make sure that we maintain communication and updates with the finance committee so that you knew what was happening at both of those levels and the impact that it has on our finances. This screen was what you saw before. You see that our approved budget, revenue expenditures, and our anticipated use of fund balance is about a little bit under $1 million. Where we are year to date, we're about almost 54 million of revenues have been collected. We are through both the discount and the face period in our real estate tax collections. So you know that that's the heavy lift of our revenue collection. We're starting to recognize and realize current year earned income tax collection, which is another big bucket of local sources. And then this does not reflect, it reflects minimal release of some state funds that were allowed to be released during the budget impasse, which was like our pass through of our property tax monies that go to the residents. But again, that's a pass through. So this is not reflective of federal or state dollars trickling through. Last meeting, I believe we were at about $3 million that we were waiting on from federal and state funding. So that money will start to be released. And also about 23 million or 30% of the budget has been expended. If you compare this to last meeting we were at about 17%. So I don't want you to get nervous that you're starting to see jumps a little bit. One of the unique things about school districts budgets is that it's timing of when pay happens. So our teachers, which is the biggest bucket of our personnel cost, they come back on in September. They work through a 10-month contract. I'm sorry, my dogs are in the background. No rope. So they work on a 10-month contract, so they're coming back in fully where we're starting to see the full scope of their salaries and benefits online. So I don't want you to be alarmed because that is a normal jump that you will see in school district budgets. We collect our revenues very, very quickly, and then we kind of tail off, and it'll start to trickle in as we make our way through the fiscal year. And then you'll see expenditures, while they start slow, they ramp up as it goes on. So I don't want you to get nervous when you say, oh, we got all of our revenues, and then here we go with expenditures, we're jumping. That is normal in school business. State budget update. We have an adopted budget. We are very happy about that. That came the week of November 10th. Some of the key contributions, and I attended a PASBO workshop. I believe Dr. Yannicone jumped onto a webinar that talked about what led to this, what things were happening with the state budget. So based on my webinar that I went to, the key contributions is they said Governor Shapiro was the main driver in finalizing the budget. They could not stress enough how bipartisan the effort was to get this passed, but he was the person that made this happen and really got this push going. So they're saying that with the House, it was a 70% support, Senate 80% support. So combined total was 75 support for appropriations and the school code, which they say is a truly bipartisan effort. So we are happy that they came together. They worked through some of the issues that they were having with the impasse to get federal and state funds flowing back to the districts. So just as a quick summary, as far as the appropriation changes, just high level, the appropriations were about $1.5 billion less than proposed. However, it still was, and that's proposed from Governor Shapiro's original budget. That's about 4.7 billion still higher than the previous year. So while it was a decrease from what he proposed, we still saw an increase in the appropriation levels. What does that mean for the district specifically? If you remember way back when the projections came out, we were getting very nominal money. And while this isn't, I would still call it nominal money, it's much higher than we had anticipated on what we were getting. So our basic ed subsidy, I believe we were maybe below $60,000 with the original projection. We're getting almost $66,000 increase. Our special education funds were at about a $68,000 increase. I think that increase was maybe $20,000 in the original appropriations proposed. And then last year, what they did with Ready to Learn block grant funds, they gave adequacy adjustments and other adjustments to districts that were considered low income, that were considered to get the level up funding. What they decided to do this year is at a minimum for any district that did not receive an adequacy adjustment, we got $50,000. So anybody that received zero last year, they gave us an additional 50. So that will bring our Ready to Learn block grant up to about $130,000. So that's good news on the front. As you know, my budgeting technique on the revenue side is I always go based on what we received prior. So these are funds that will trickle in into our budget and go towards unexpected expenses or cut down that use of fund balance. Any questions on this slide? The last thing I do want to say that I did not, because I didn't go into the meat of all the appropriations and everything at the higher level. One of the big talks in this budget and that has been ongoing in school education is about cyber charter reform. So while there wasn't the anticipated reform of having a flat tuition rate of $8,000 or receiving funding from the state to offset cyber charter tuition, there has been a change. There was reform in the level of the manner in which the calculation for tuition happens. So while they don't call it a cost savings, they call it a cost avoidance. That's the way that they're terming this cyber charter change. So they're allowing for more deductions. Believe it or not, in the calculation of the cyber charter tuition, we were including our payments to the cyber charter schools. So they are now allowing us to back that out. So that's a big help. And there's some other facility items. I think we're allowed to deduct about 60% of our facilities. So that'll bring the amount of tuition that we actually pay out to cybers down. So that's why they're saying it's a cost avoidance, not a cost savings, because it's not just cutting it into a flat rate. On the other side of this, that's for regular ed tuition. On the special ed tuition for cybers, they didn't do quite the same thing. They're leaving it as the regular calculation or 1.9 times what our regular ed tuition rate comes in at. So we already calculated out our PDE 363, which is the tuition form for charter schools. They said to look for guidance from the state on how we are going to reconcile this all out. And what this looks like, because we've been paying for cybers up until this point based upon the old calculation. So at some point, that's all going to get reconciled out, and that's where we'll recognize those cost avoidances. Any questions on that? Okay.
Ms. Green, if I could just jump in there a second, if you don't mind going back to that slide. I just want to make sure that we highlight, not only for our committee members, but also for our student representatives. It can seem strange to have the state approve $4.7 billion in increased revenue to school districts and have us receive about 283,000 of that 4.7 billion. So I just want to point out, while we're certainly happy for any increase the state provides to us, in a budget of approximately 75 million in Springfield Township, this is a relatively small increase in revenue from the state. And that's the result of two things. One is our relative level of poverty across the state of Pennsylvania. So there are many rural districts and districts in urban centers that are considered to have a higher degree of poverty than Springfield Township. So it's not an even distribution of the 4.7 billion across the 500 school districts. And the second reason for us getting a much smaller piece of this $4.7 billion pie is that we are not including many rural districts, but for suburban and urban districts, or collar districts as we're called, we have a relatively low student enrollment at 2,500. We're the second smallest district in Montgomery County, and we are on the smaller side across the state when you account for the huge geographic region of many of the rural districts in north central, northeast, and northwestern Pennsylvania. So there are some other factors that play into how much money we receive. So the challenge for us as an administrative team, and Ms. Green is working hard to make sure that we continue to be responsive, is that costs continue to increase, but our share of the pie continues to be relatively small. And so our goal, as she mentioned earlier with regard to the audit, is to look at how we can reduce our dependence on the fund balance, basically balancing our budget while continuing to offer great programming across our K-12 schools. So it's an increasingly challenging task for our business office, but it's one we'll continue to discuss throughout the year as we build towards next year's budget. Thanks, Ms. Green.
Absolutely. Any questions or any other comments? Okay, so we're going to jump to the next agenda item. So what we would like to do and what we're proposing is that we would like to go out to RFP and go through that process for future capital planning and retainer services with a construction management firm. As you know, we've engaged CHA, and right now they are the firm that is overseeing the middle school project. And they also, we have them on retainer for any other capital projects. What we are doing is our due diligence as we are coming into a year of very intensive work within the middle school. In the next phases of wrapping up the auditorium, of the bathrooms, and the kitchen. What we would like to see is to make sure that we are getting the best services for our other capital projects, so that, you know, that intention isn't split. So we just want to go out for requests for proposals. And again, this would be for future capital planning. It would not be to change CHA if they were not the successful bidder on this RFP process. For the middle school, this would be for future. This would be the 5-year capital plan, the 5-year operational plan, and then putting that person or that group on as a retainer services for anything that comes up that is out of the scope of what Mr. Watley can provide for the district or any other professional service. So it is a due diligence process. We would like to go out and start advertising for that. We would look to bring the award back at the January meeting so that we could hit the ground running on talking about what we are looking for in the summer of 2026 outside of the middle school project. And for those that participate on the facilities committee, if you remember, if you don't remember, we kept the projects pretty light this upcoming summer. It's a lot of it's investigatory, but we kept it pretty light because we knew that the big lift needed to go into the middle school. Is there any questions or objections or comments about this?
Kara, I guess I'm just looking for clarification. So this is because CHA was involved in the 5-year plan,
Correct.
and then we did some. I'm trying to connect everything together. So what were they awarded with last year?
So last year, they are a construction management group for the middle school project specifically.
Right.
Then we put them on retainer services. So there's a retainer service agreement right now with CHA, which would discuss about future capital planning, the actual capital plan. We had them on retainer services to create that document. So at this point, it would be the group or the firm that would be the successful bidder on this, or awardee on this, would move forward with that 5-year capital plan.
Okay, so this is goes beyond the retainer with them. What was this? So was this going to happen regardless? I guess I'm trying to completely understand what is bringing this up at this point.
Sure. So again, for myself, Mr. Watley, Dr. Yannicone, in discussions, again, we're moving into a phase into the middle school project where, with the due diligence that CHA is doing, just making sure that we are getting the focus on the other areas of our 5-year capital plan, and making sure that, possibly not splitting the time between that project and other things that are happening within the district. And just going out and taking a look to make sure, as far as pricing, again, just the due diligence of it. So, I just think that it's a due diligence piece with this. It's the fact that we're in a major project, and we want to make sure that we are continuing to provide, a look into implementing our 5-year capital plan. So piggybacking that together, we just wrapped up the middle school phase 2 of the fields. And that was through CHA. That was with their oversight. And that was another thing that they were doing last year as well with the retainer services. And they were named our construction manager. So with different projects, you can name different construction managers. It doesn't have to be a single construction manager on one.
Okay.
And I don't know if that's causing some of the confusion on why they're just not the construction manager on record and we just use them for everything. Um, you can have that change at any given point. It's project based is where your main construction management services are being provided. So again, we're not removing CHA or making any changes with CHA for the middle school project. What we're looking to do is to make sure retainer services and cost and time and the ability to handle scope of projects moving forward are maintained as we're finishing up the middle school project.
All right, and so this is retainer services. So of the capital plan, this isn't like moving forward with any specific item. It's just there should the district decide to move forward with some of the specific items, and then each of them will be discussed as we move along.
Correct. We will revisit, you know that we have a list of things for year 1 in the capital plan that was starting in summer of 2026.
Right.
Again, we'll have to, the next finance committee will be doing, that's the January 28th meeting. We'll be doing a look at our next borrowing for the middle school project, and just a look at our capital project financing as a whole. So one of the things that we were looking to do is put the plan in place, how we were going to pay for it. And again, we tried to lighten the load. If you look at the 5 years that were projected, I think next summer is the lightest one. And that's because there's a lot to do in the summer of 2026 with the middle school project. So we wanted to make sure that we weren't overburdening ourselves with other projects and implementing those. But we also want to make sure that we are laying true to the 5-year capital plan to make sure that we're not deferring things that we get in a situation that we're paying double or triple because we had to defer them.
Got it. That makes sense. Thank you so much.
You're welcome. Any other questions?
Ms. Green, if I could just also share for the members of the board.
Sure.
And our student representatives. So one of the things we're trying to do is we're building the budgets and we're planning out for the next 5 years, not only the capital project, but as you know, we have an anticipated decreasing Act 1 index over the next 5 years. And so one of the things I have asked each of our department heads to look at is where are we able to make adjustments in costs that'll help us to reach our goals to move towards a more balanced budget. And so whether it's Mr. Lutz in the technology department or Ms. Green looking at capital projects, with Mr. Watley and his team. We want to make sure that whatever vendor contracts we have, we're getting maximum quality service at a competitive price. And so that's just going to be a continued effort of our team. And going out to RFP here is not in any way intended to denigrate the good service we've had from CHA on the middle school project and on prior projects when they were previously doing engineering. It's just an effort on our part, as Ms. Green said, to exercise our due diligence in making sure that when we bring contracts to the board, whether they're retainer contracts or vendor contracts, that we know that we're getting the most competitive pricing we can for good quality service, whatever that service is. And they're just two examples, technology and capital service. Thank you.
Any other questions on this? Okay, next up would be public comment, and if I recall, Mr. Wexler said there was no public attending. What's coming up next? So at the regular board meeting on Tuesday, December 2nd, the action item that we're going to need, and this is similar to what we have done in the past. I know you heard Alex say that we won't have final copies of the financial statements done until that one circular is taken care of. We're kind of holding in our pattern. But also one of the things that he said is that there's no significant changes. So holding true with that, what we would like to do is to approve the 24-25 audit in its draft form as we've done in the past at that meeting under the recommendation of the Finance Committee. In the event that there are any significant or material changes, I will pull that action item and make sure that that is communicated. So it will move forward as long as items stay the same that the Finance Committee saw today. Is everybody comfortable with that?
That makes sense to me.
Yes, I'm comfortable with that. Thank you.
Perfect.
Yep, I agree.
Perfect. And then again, January 28th, this was a kind of an impromptu meeting, but in speaking with Jamie Doyle from PFM Financial Advisors, we want to get the ball rolling on our next $10 million issuance to make sure that we have time and we can get funds into our bank account. Because again, we are rolling through the construction projects, so we need to pay bills. So our anticipated agenda is going to be the 2026 financing plan that will be presented by Jamie Doyle. That is what the Finance Committee is used to seeing in the presentation. And then there will be a capital project financial update of all of our capital projects within the district and specifically in our summer of 2026 projects. So that's what's coming up. And then just a kick down the road, the meeting right after that, which is February 26th, I believe, that will be the first look at budget. So we are toiling away at budget. So we got some fun meetings approaching us with the 2026 year. And that is all I have. If there's no other comments or questions, we can adjourn for the day. Good.
I actually do, Kara, I'm sorry, I do have a question.
Sure.
I couldn't find my mute button earlier. I apologize, I'm driving. I just wanted to share an opinion. One, I'm appreciative of Governor Shapiro and the legislators in Harrisburg for finally getting a budget passed with an increase for funding for schools. So just wanted to acknowledge my appreciation. I think as we think about that as a bit of a windfall, as small as it is for Springfield Township, I would want us first thinking about how we maintain a healthy fund balance before we would put that windfall against any operating budget that we hadn't planned for. Meaning,
Okay.
I would want to create more optionality for us as we go into next year's budget by maintaining a fund balance that we could essentially one for one tap that same amount next year if we feel as though there's more cost pressure than expected given the inflationary environment we're in. So that's all. I just wanted to share. I think fund balance is the place to put windfall, because that's what fund balance is for, is to cover when we have shortfalls that are unexpected. So that's all I want to share.
Thank you. I appreciate that. I'm getting some clues between last night's meeting and this one. I'm hearing our marching orders for budget this year.
Yeah, you're hearing well.
I am. Perfect.
Mr. Bedard, I just want to, because that was mentioned last night at the board meeting, and Ms. Green has shared some information with our administrative team, I just want to acknowledge that in addition to the reductions over the next few years of the Act 1 index, as anticipated, we also have commitments to our STESPA members that include increases in salaries and benefits that are contractually obligated by the board, that were committed a year ago. And this time next year, we will be negotiating the teacher's contract to begin in 27-28. So there are some significant, very real, very important challenges for us in order to continue to work towards a balanced budget, remain competitive in an environment with a teacher shortage, and reducing opportunities for revenue generation through the Act 1 index. So we hear the marching order. We will do our very best to bring you a reasonable budget, but we are going to be threading a needle in order to do that. And I hope the Finance Committee understands that.
That is very clear as well. And I agree that the administration has a very challenging role to play in setting the budget. And we have a challenging role to play in making sure that the burden on the community is, fair and balanced, given that there's burden on the community in lots of other ways when it relates to cost as well. So I think it's just, we have that fund balance for a reason. I just want to make sure that we're caring for it as a priority.
Absolutely. We understand.
Most definitely. Well, thank you. I think I don't think there's any other comment that can segue us into closing this meeting. So thank you, Mr. Bedard. Much appreciated.
Appreciate you. All right. Thank you.
All right. If there's nothing else, I'm going to say have a great day to everybody, and thank you for your time and attention. I know audit's not the easiest thing to get through, even though Dan and I love it, but I know having to listen to that sometimes can be painful. So thank you. Have a great day, everybody.
Thank you very much.
Thank you. Thank you.
Bye.